Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, February 4th, 2021. In this video, I'm going to do an update on gold, silver, and the mining stocks. It's been quite a while since I've done a more comprehensive update on those. I've touched on them lightly over the past few months, and just kind of recap for those that are catching up or haven't, followed my analysis on gold. I remain longer term bullish on gold, but we're still in correction mode. Going back when you turn on all these lines here, this is a weekly chart of gold, so we're going back decades here, at least a decade plus. And you can see the gold hit that major reaction high. There was our previous bull market top back there, and so when we hit that again, that was it has been a long-term target throughout the bull market. I've been consistently bullish on gold since the bottom back pretty much in 2015, 16, mostly long up until this point. And then I mentioned, quite a few posts getting out of all my positions, my long-term positions, expecting a correction because that was a major reaction high. Gold was overbought. Again, I can go back in time. You can reference those posts. There were a lot of reasons cited, and it has been that. It's been a correction, but let me just lay it out here. My thoughts. I still at this point in time, and that could change, still think it's a correction or ongoing bull market. One of my favorite indicators, there's many out there, but to spot a trend on just about any time frame, in this case again we're using a weekly chart, is using the PPO. I like to use that signal line, the white line, last of the two to cross, and you have the zero line right here, and that dash line. And essentially when the 9 EMA or the signal line is above the zero line, as it was all throughout here, the trend is bullish. We were in a bull. This was a primary bull market in gold. There was a healthy correction halfway up, roughly halfway up. Big drop. I think it was about almost 30%, if I recall. Yeah, about 30, 31%. And you can see, oh, clicked the wrong button. That flipped that indicator to bearish for a while, and didn't get you out the exact top or in at the very bottom, but again, it allowed you to sidestep some of that. And if nothing else, when we flip back to bullish, the bull market resumed. It was a resumption of uptrend. Here we started to get we had another early warning sign after the top came. There was a blow off top in gold back in 2011. We had the first bear market rally. And at that time it wasn't apparent to all, but we were, obviously, in hindsight, you look back and say that was a bear market rally, flipped that indicator back to bullish, but then clearly went bearish and remained so. So you can see it did a great job of getting you out of your longs or getting you short throughout the majority, almost all of the bear market in gold. And then back here, we finally in it was December of 2015, if I recall, the exact bottom in gold right there, and you can see we flipped for the first time to bullish. Now the bull market in gold, it was off to a somewhat slow start. It was a bull market, but there was a lot of sideways to slightly up action until it broke. I remember it was the key 130 level. That was my big level. And when 130 broke, that was just lights out or lights on, I should say, for gold. That was a big resistance level there, and that started the strong move up. But again, you look at that trend indicator. Now, where am I going with that is, yeah, we had, again, there was more of seemed like a basing pattern here, and there were some corrections in there until gold took out 130 and really took off. And so you had a couple whipsaws. But with that being said, back in the past here, in a bull market, quite often you come back and you test that zero line, and you get another run up. So that's what we've done. We've had a correction, a needed correction, in my opinion. Nothing can go straight up forever, and the more overbought you get, the bigger the chances you're going to get a correction, and that's where I'm viewing this as of now. And but we are coming up. When you look on this weekly chart, we have some pretty good support here. About 164.80 is what it lists on my chart. We'll call it 165. And again, the PPO is getting down towards that zero line, very close. I'm doing the video now. I'm going to tell you, I don't think it's a hard buy for gold, but let me go back, jump down to a daily chart here. If you recall, on exactly that where the crosshairs are on November 30th, I laid out a post I think it was labeled time to start scaling back into gold. And I listed this buy zones that step in a little bit above that 165.12, 165-ish support. It's a pretty good support, moderate support up top there, solid support on the bottom, and that worked out. That was the first big rally that we've had, the biggest rally in actually a couple of years here, or at least going up. I'm sorry, I should say going back to that blow off top there we had in 2020, but a pretty good size one. And we ran into resistance. I know this chart's a little busy, but this is a resistance zone. In fact, you had a previous reaction high right there as well. You could even put another line. When I have a lot of resistance lines in close proximity, I refer to that as a resistance zone, and that's what happened there. So we rallied up, hit that level, hit resistance, and have pulled back, and we're getting very close back to that buy zone. And I said it back then, this was not a hard entry in gold. I tried to differentiate between what I call a hard entry on something, which is, let's say if I'm trading a chart pattern, a swing trade, a breakout, and we break out of a bullish chart pattern, triggers a buy signal. That I take a full position, take the swing trade. Whereas if my confidence isn't so high, and I'm looking bigger picture, which I am, as I just spent a lot of time on the weekly chart, I look at times to objectively scale back into a position. All the longs closed out back back when gold hit that long-term resistance zone. Silver also hit resistance, and that's it. So I just want to say we're very close there to the top of that buy zone, and I maintain what I said back then. You can buy anywhere from the top down to the bottom, but not below the bottom of the buy zone around 158, because that's big support. If that breaks, other things are going to happen to gold, including we'll probably have that PPO trend indicator on the weekly chart flip to bearish. You can see here the PPO trend indicator is still, or at least this point, we had a little whipsaw right here, but it's also under the zero line, the PPO signal line right there, the white line. So work to be done. And you can stop the video here if you're looking for exact timing. Trades where you can jump in on right now. I'm going to go over levels, and again, point is I think you can start scaling back in here, and possibly this early. I've sort of a mixed bag. I'm going to get to GDX in a second here and go over the components, and as well as silver. Let's just jump over to silver real quick. What's happened with silver recently, and I want to share my thoughts there. We had a little Reddit pump last week. There was they got all from what I read pumping, trying to engineer a short squeeze on silver, and it happened one day, and they faded in all that and then some. So less those that got in early before it happened than sold the day it popped on what was that, Monday, and got out. Most of those have been smoked now on that trade. Anybody that bought it on Monday had that big pop and a breakout was now a false breakout because we took out the previous highs. All those gains have been faded 100% and then some. You can see silver continues to fall. It's down about 13-14% off that high. Now what it did on the bigger picture on the daily chart, it put in a divergent high. Now we did have just before that a divergent low down here, right here. These equal lows and positive divergence on the indicators, and that was a technical catalyst for that move. So mixed bag stuff. I'll say this: silver right now looks more bearish than gold, and that also would align with any big correction. I still have all my not all, but a lot of indicators flashing some warning signs on the stock market, low volume indicators, sentiment indicators, and other things like that. So if we get a healthy correction in the stock market, and I'm talking a big double-digit drop, what you'll probably see, based on the charts which are confirming that, is a drop in silver. At the very least, I expect silver to outperform gold. What I think will happen is gold will probably catch a flight to safety bid during the next correction because it's beat down right now. There's some value in there. I think you'll see people step in and buy it. And remember, gold tends to catch the flight to safety bid. Silver has more of an industrial component to it, industrial uses, even though gold also has some, definitely has a lot of industrial use, but it's also, again, the key flight to safety instrument. So I'll go back to a weekly chart, and let's see. Okay, I had to turn off one of the comparisons. This was a big major resistance zone right there. It's labeled back at the time. We ran into that. At the same time, gold ran into that long-term resistance, which was gold's previous bull market high, not in silver. Silver, was well below its previous bull market high, but it was major resistance, and we had to pull back, and we hit that 2072 pullback target right there. Which was support, and so far it bounced. Now, with the high that we had the other day, it put in this steep divergence, and again, silver has that higher industrial component, and I'll even show you what's happened in the past with the corrections with gold and silver in the stock market. Okay, what we're doing here is comparing three things. We're comparing the stock market in white, SPY. Gold is in yellow, and silver I picked it was blue color because it would stand out best. And you can see here this was look for the corrections in the stock market. So you had the big drop here. That was the bear market, 56% drop in the S&P 500 from October 07 to March 09, right here. That drop, and you can see at the time when you look at the silver and gold overlaid. Gold had a much smaller drop. Gold dropped from there to there, with silver dropping much more. So again, gold, didn't go up. Everything was liquidated. That was a liquidation bear market where margin was, interest was excessive. So there was a lot of forced margin selling, position unwinding, hedge funds and individuals were over leveraged. So just about everything, even treasury bonds for a large part of that got sold off. Very few things were unscathed during that market. But again, gold held up much better than silver. And you can see here's another big correction in the S&P right there. You can see gold actually rallied while silver got sold off. Let's look for another correct. Well, here's a big drop into the COVID lows. Silver really took it hard. Gold was not unscathed completely, but dropped less than silver. So that's what I wanted to show you there, and keep that in mind for if and well, not if, but when the next we're in. The next correction is underway in the stock market. Again, you'd probably be better off with gold than in silver. Some people even take a paired trade, go short silver, long gold. Of course, then there's the dollar, and this is the chart that I posted this morning. I stripped out a couple of the comparisons that I had in there. Let me go to arrow tool here. Earlier this morning I showed you UDN, which we're looking at here. Now UDN's in black. So this is UDN right here, the inverse of the dollar. Because I use this because the dollar and gold is a dollar sensitive asset. That means they're inversely correlated. One goes up, the other goes down. And it's a lot easier to see that inverse correlation when you flip it around to a positive correlation. So that's why I'm using the inverse dollar. And as I mentioned, and I've been harping on this whole dollar thing in euro, and that has played out, almost to the T of where the charts predicted it. Yet we're not only not seeing the other dollar sensitive assets follow the dollar inversely, mainly oil and gold. We're seeing them go the other way completely. So whereas gold, here's the correlation, it has been extremely tight. And I always say this, don't look at where the lines are separated, look at the direction they're moving in. Both are going up. Look when they both peak. Look at all the smaller peaks in there, the inflection points. And here there was a disconnect. Right there you can see gold was dropping and UDN was going up. That means the dollar was falling as well. So there are those periods of disconnect, and that's what I wanted to talk about here. And again, you're seeing that disconnect right now between the usual correlation with the stock market and oil. But other than that since that period, and look what happened. Remember, this is the dollar falling, even though because UDN is going up. And what happened is gold played a quick game of catch up. And so as the dollar fell, gold rallied up into those highs. Then the dollar peaked, right there, or bottomed, I should say, the dollar bottom with UDN peaking, and it has been a perfect correlation. So as that dollar rally that I was calling for has played out, it has put pressure on gold because gold is not trading as a risk-off asset right now. People are buying stocks, so the gold has lost that what is an on and off relationship with the stock market, risk on, risk off, and so it's trading purely on the impact that it has on the dollar, and that's it's very simple. I would say this: it's gold's priced in dollars, so if the dollar is weakening, it's going to take more dollars to buy an ounce of gold. And if the dollar is strengthening, it takes fewer dollars. And that's why you have that inverse relationship, especially when you strip away the other supply and demand dynamics in gold. In other words, you're not getting the demand for gold from a flight to safety risk. Nobody wants steady gold when the stock market's going up. Gold doesn't pay a dividend, and but they will when the market corrects. You'll probably see a bid to gold. So I wanted to just spend some time on that, and then talk about which I've showed you ad nauseum lately, the euro US dollar. You're probably tired of hearing about it, but it continues to play out, heading down towards that. This is the daily chart, that next target down there. It's broken, horizontal support, broke the trend line, and continues to play out. So again, gold is feeling the pain there. I always say this, that the euro, I use the euro US dollar pair, or sometimes straight up euro via futures, in charting the dollar because of that extremely huge weighting. The euro is 57.6 percent weighting in the dollar index. The second is the yen, which is by far the largest. Everything else doesn't even add up. The yen is 13.6. So you can see it there. Between the yen and the euro, that's almost the entire dollar index. Again, all the other currencies in there, they're just almost insignificant. Their weighting is so small compared to these two. And you can see, it's no coincidence. Now, on the euro US dollar, I had euro comes first on that Forex pair. And that's why it means when that one's going up, the euro's rising against the dollar. When they compare it against the yen, it's always the dollar versus yen. And so this is the dollar strengthening. In other words, when this chart is going up, the dollar's going up and the yen is falling. I hope that's not confusing. But and just a beautiful bullish falling wedge pattern. And again, this went into my call for the rally in the dollar here, and it broke out and back tested, and it just continues to rally. Again, it's a strong rally in the dollar against the yen, and it's certainly having an impact on the dollar index, but an impact at a weighting of about 13.5% versus the 57 on the euro. Okay, so we can get the currencies out of the way. Bigger picture, even bigger than this daily chart is this weekly chart. And again, I want to reiterate that I remain longer term bearish on the dollar, bullish on the euro. So the euro US dollar, I think this is a correction. We had a major breakout of the long-term downtrend in the euro USD. And so longer term, I think we'll continue to see the euro strengthen against the dollar, a weaker dollar, and that going. I know Europe has their problems, but I think of problems in the U.S. I think, and I don't want to digress too much. I think Powell, and not just Powell, what the Fed is doing and what the federal government is doing, handing everybody money, writing checks. It seems we're doing more stimulus in other countries, and that ultimately is going to result in a weak dollar, in my opinion. Again, it's priced in the charts. Forget about what I think. I'll tell you fundamentally what I think all day long, but the charts speak a lot louder to me than fundamentals, and they're much more accurate. You can sit there and debate fundamentals all day long, but charts, I can give you concrete reasons, or at least concrete levels, that if taken out and violated or broken or support held, then that makes a strong case for either a rally or a drop in the dollar. So where are we at now? Where am I going with this? Well, we had a breakout, which is longer term bullish, but we did it, and after the breakout, we put in negative divergence, and we were overbought. Divergence, especially breakouts with divergence, often result those breakouts. It could fail, but I'm not looking for a failure. I'm looking for a correction that's probably going to be deeper than what we've seen. We'll see how we close this week. This is a weekly candle. If this candle Remember, I have us very close to the euro, yeah, I'm very close to the euro on the 60-minute chart, my third target zone. So we can hit this week, turn around and bounce. And again, this is a 60-minute chart at E7. And what that's going to do is it could take this candle, which is still in progress this week, because this candle does not finalize till Friday, and put us back on that trend line. And we could get another thrust up within the wedge, or it goes the other way. Maybe we slice on through that third target zone, or stay down there. When this candle gives us a breakdown, then we could go on and back test. But ultimately, that's what I'm looking at. I think we can come back here and back test that trend line. That's more upside in the dollar, more downside in the euro, then have the correction over, especially if the scope of these divergences. That would indicate more downside to come in the euro, more upside in the dollar, and which, like I said, net should be bearish for gold, and bearish for the stock market and oil. But I have to point out that this breakout is very bullish, the long-term downtrend breakout, and we do have some support here. I keep talking about that on the 60-minute chart and the daily chart. So very near term, I don't know where we go, other than very, very near term. I still think my third target's going to get hit. Heck, we're almost there now, my T3 zone in the euro, and I think we'll most likely get a reaction there. It's a target zone, so maybe at the top, maybe at the bottom. We're going to have, well, we might not have the divergence now, at least on the RSI. It might get burned through. Okay, so enough on that. You can kind of see where I'm at on the euro. Fluid chart, and I'll continue to do updates there. On gold, like I said, as of now and as of lately, it has been moving in near lockstep with the dollar, inversely, and but it is coming up on some pretty big support right there, and that's roughly the top of that scale-in zone. So I maintain that once again, if we're getting close, we're very close to it, that top of that scale-in zone, as well as support on the weekly chart. You're talking only maybe 1.5, 2% to the top of that zone. So I do think you could start scaling in here. Let's look at some of the mining stocks, and then we'll wrap the video up. I'll just go through the components of GDX in order as they're weighted by market cap. I have a watch list to the right of the screen here. You can't see it, but there's 28 items it's showing me in GDX. First one up is Newmont. Newmont is at pretty decent support there and has potential, and this is the story here. A lot of these have potential divergence. The gold miners actually look better than the silver miners right now. I love trading the silver miners. They tend to rocket. When they go, they can really run. When I'm looking at this chart, I'm seeing a little bit more constructive looking charts on gold stocks. Now look, if Newmont doesn't hold 56.78 or so, I do have another very good support here, or pretty solid, I should say, about 52.43. And I like to toggle over to the weekly charts and help confirm or refute my analysis. And the same story, we're coming back. This PPO is back testing that zero line, as it often does in bull markets, to keep the trend intact. Back tested there. This is bear market action when you're trading below, bull market action when you're above. That one, next one up was, nope, I don't know why this one's in here in Genomics. It's somehow on the watch list. It's populating that. That's not a mining stock. It's an error, I think, on the watch list. AEM, pretty decent support right here. You can see all these reactions around 60, starting around 65 down to about 63, 66. So it's a common theme that a lot of the gold mining stocks are pulling back. There's a reaction low there as well, getting close to support. And look, if it even equals that low, all it has to do is equal or undercut the low slightly, maybe down all the way down here to that next support. Now I'll say this, that's a support zone. If it breaks, that would likely open the door for a move down to 57.67. So what I'm trying to show you is anything like this anytime soon, move down here all the way to there, is going to give us positive divergence. So I'm seeing a lot of gold mining stocks setting up. That divergence is not in place now, but it meshes with what I'm seeing on gold and some other things. That downside appears minimal right now, or at least minimal till you get to some decent support levels. So if gold can bounce, if I'm right on gold and the downside there is minimal as well, then we might be looking at some of the best buying ops on these mining stocks since since quite a while, because they've been in correction mode. PAAS. Here's a silver that looks okay. I don't know. You get what they did the other day with that ramp up. Again, attributed to, from what I read, Reddit trying to post about shortages in physical silver and trying to engineer a short squeeze. It popped these miners, silver miners, not the gold miners, but the silver miners popped because silver popped, but then they faded it. And what that did is it put in a divergent high like this. And you have to respect that on face value. It was negative divergence, and that's why I'm a little bit not as hot on the silver miners. But on the flip side, this one will have, you can see my divergence lines down here, and it actually just had positive divergence at the recent low. Now that positive divergence played out for a 41% rally in just a few days. But either way, I want to let you know the charts, what they look like, and you can see some levels there. And if you're confused, by the way, these are the components of GDX, but GDX also has silver mining stocks in there. And a lot of these companies, they might be labeled as a silver miner or a gold miner, but they will often, pull both metals out of the ground. They're not going to, some areas have gold and silver deposits. So Wheaton Precious Metals Corp. Oh, there's the other thing. A lot of these gold miners, you have some downtrend lines to watch as well. Which might trigger a breakout there. So what this looks like to me is a bullish falling wedge pattern. You have positive divergence. You have support here, pretty good support around 37. So you can buy this stock on around 37. If it breaks, you can see I really don't have much support until about 34, 30.48. But this would be a potential breakout candidate. If it can break above that downtrend line, especially if these divergences are confirmed. Just like these negative divergences told us to get out of the mining stocks back here, right there. RGLD, positive divergence, downtrend line, common theme here. A lot of these setting up with bullish divergences and downtrend lines in which to trigger an objective long entry. So you can either continue to scale in, or start scaling in, I should say. I haven't promoted these as longs for a while, or scale in, or wait for a breakout to add to positions on some of these trend lines. And the more the trend lines and resistance levels overhead that get broken on these stocks I'm going through, the more likely that's a legitimate breakout in the entire sector. Resistance here, we've kind of sliced through that level. I don't have a big opinion or a strong read on AU. Let me just go like this and say maybe a downtrend line like that. I'm not crazy about it. Let's move on. HL, Hecla Mining, that's a silver or gold stock. And that spike up is what gave us that divergent high. Again, it was a artificially induced spike due to that all that everybody getting tied up in that Reddit noise. Other than that, the stock's kind of stalling out here, moving around in this trading range. So I wanted to point out 462 is support. You can buy it on around 462. If that breaks, you can see the next levels down there. But that did give us negative divergence on that spike, and that's what again I'm not liking about this. It's showing me this is a gold stock now. In the past, I believe this one was categorized as a silver miner. I could be wrong on that. BVN, no positive divergence. Probably a downtrend line right there. That's what you want to watch. Break of that downtrend line. KGC, Kinross Gold, positive divergence right there. Again, a lot of these you can add some downtrend lines like that. CDE, Queer Mining. This I could have sworn this one used to be labeled under this charting program as a silver miner. You can do your own due diligence. Go to Yahoo Finance, type in CDE. It'll tell you whether they're more of a gold or silver mining stock. There it is. It put in a divergent high recently on that big pop the other day last week. or Monday. I think that was, yeah, Monday. BTG, nice support right here, 488. So I think that's an objective long. Again, I wouldn't go all in on any of these. This is to me a scale-in time. That's why I'm doing the video. I think it's time, first time in a while, to start scaling into these positions. Or you can sit back and wait for a little more evidence, a little more in the charts. Maybe gold to get a little closer to support. But again, if you're looking right now, you want to start scaling in the minors. As I do these videos, I tell you which ones that I think are objective now, like this one. Doesn't mean the others can't turn around from here. I just like to it's TA 101. I like to buy support 488 with a stop somewhat below. So if I'm wrong, I know I can have a stop that's not just randomly placed. It's placed below a support level that, if taken out, is likely to cause more downside in the stock. Now, always give it a little room to allow for whipsaw signals, and keep in mind, even on a marginal break, you're still going to have that divergence for a while unless the stock really heads down. So there's one, and all these are resistance levels, potential targets, but ultimately, I think we'll see the next breakout in gold to new highs, and the correction will be over in the bull market, and then these stocks could have a lot more upside to go. GFI, another one at support, about 863 or so, and that's it. So buy support. If it goes a little bit lower, you can give it a little bit more room, because you'll have positive divergence on any slight break. And remember, we also have a reaction low a little bit above that 863 level, so that your stop would be placed somewhat below that previous reaction low. All right, AUY. It's trying to hold this support. It's not a hard support level, but it's been dancing around it. You can see a previous reaction high here and a reaction low there, and really no divergence. This one's burned through the divergence right now. AIG, divergence right there, positive divergence, and again, you might be able to draw. Depends on, you could use that high there, do a trend line like this off these other reactions, and it is at good support. Again, that's why I wanted to do the video. I'm seeing things that I haven't seen in a while. There just hasn't been much to report on these. And here it's in no man's land, grinding around in a downtrend between support and resistance. But what I'm going to do here is highlight, gap right here, reaction from above, a reaction from above, breakdown, reaction from below, gap up, right up to that level, several reactions on there, several reactions, breakdown. And we didn't just get below there and then snap back. We broke down, we sold off. So enough reactions on that level, including recently. Always put a higher weighting to recent reactions than reactions in the past. So that is a solid support level, and I can say that now. You can step in and buy it there. I can't promise that it pans out, but I can tell you it's objective to buy it around 323. With a stop somewhat below, especially considering there's divergence in place. Don't expect these things to go very far until and unless gold rallies. Let me just say that. They're going to follow gold ultimately. AGI, Alamos Gold, pretty good support here, about 736. We're close to it now. Positive divergence, just like this negative divergence said get out. We're going to have a correction. This positive divergence says get in. We're likely to have a rally. This one I didn't mark it, but there's your divergence right there. PVG, and similar. A lot of these downtrend lines aren't super solid because there's only a few reactions, but they're worth marking on there. And also at support, big old gap. That's gap support as well. Traders love gaps. They look at these gaps right there. There's another, that's double gap support right there. And that's where we're at right now, right around the $10 level. And we're a little bit above that level now, but if you can get it down there on a pullback to that $10 level, you might, depends on how much you're shooting for. If you want to allow wide stops, you can use a stop below this support here, about 938. There's a gap there and some other reactions, or you can keep a more aggressive stop. All right, OR recently put in a divergent high. Here's some support around here. This one is SSRM. And it's cracking below this 1733 support, but if it can get, it's not far below it. If it can rally back above there, good. So I'll say this one you can step in here and buy it with a stop not too far below, because it should get back above there soon. because that's pretty good support. And again, it's all going to depend on what gold and silver. At this one, in the past, I believe this was listed as a silver stock on my platform, so I think they have a large silver mining component to it. I could be wrong on that. You want to check that, but so it'll help if silver rallies as well. AG, First Majestic Silver Corp. That was that big pop the other day with the squeeze in silver, and then that squeeze in silver, as I show you, is faded. But look, right back down to support. There was a pretty decent support, about 1463 plus a trend line below. So you could start scaling in here, down to, but not below the trend line and that 1276 level. That's where I would scale into and then have a stop somewhat below there. And that's AG. Only a few more to go, guys. I think about half dozen more. HMY at support. Support's about 407. Objective long here, or on a breakout above that trend line. Or again, if you don't like bottom plays, you know me, I like to catch tops and bottoms. If you don't like that, then wait for some evidence that gold has reversed, or maybe wait for gold to hit support or breakout. If it breaks these support levels, there could be, and keep in mind, I'm showing you objective long entries, but that you have to have plan A and plan B in your trade. Plan A is, okay, you're going to buy something where you're going to sell it if it goes up. And then plan B is where you're going to sell it if it goes down, if you're wrong. And this one could drop. If it hits that next support, you're talking about almost 29-30% down to that support level there, which is about 294. So keep that in mind. There's another support right here below that. So this is more of a support zone we're at. But again, I like it from 407 down to about 378. Because if it happens soon, because that'll give us positive divergence, which we almost have now if we make another low, but then not much below that 378 level. SAND, positive divergence building as well. We're not to support yet till we get to about 589, but if the rest of the sector were to take off, because I have quite a few of these stocks at support, then this one may never get down there, and there's a potential trend line which it could break above. 777 would be your first target at this point in time. There's some minor resistance a little below that, about $7, and then 777. So 7 and then 777 for your near-term targets, and then if they start to play out, I'll give you additional targets from there. But again, you might be looking at this as positioning for the next big move and breakout above those previous highs, and in that case then you can use much wider stops. FSM, Fortuna Silver Mines, put in divergence, negative divergence recently, but it has really good support here around 590. It's in no man's land now, so if you can buy it down around 590 with a stop below, great. Other than that, there's really, I don't see any clear resistance overhead except the previous reaction highs. EGO, that one did put in negative divergence recently, so like I said, there's a little bit of a mixed bag here on its technicals. A lot of these did put in divergences recently, but then again, a lot are at support. And the other thing is, keep in mind, if and that's a big if I'm correct, gold is still within a larger primary, a secular bull market, divergences can be burned through. Negative divergences tend to play out for either a relatively minor correction in a bull market, or they don't play out at all. So we've already had corrections, and maybe that's all we needed to get to satisfy those negative divergences. NGD, New Gold, support coming up here around about where we are, down to about 155. Also put in a divergent high. But should it go much lower, we could put in a divergent low if we hit that 155 level and then reverse. It would look like that. SVM, support around 569, give or take. If you could step in there, that's objective with a stop somewhat below. Last time it hit there, we did have positive divergence. So again, common theme. A lot of these stocks, I mean, it's a mixed bag, I'll be honest with you. Quite a few put in negative divergence recently, but most of those that did it was on that little short squeeze the other day, and most of those were silver mining stocks, not so much on the gold mining stocks. There's DRD, positive divergence, if we make a marginal new low right now. EQX, previous reaction low right there, positive divergence. And that's the last one. So that's the last, at least, of the GDX holdings. One other one I like that's not in GDX I didn't cover, I came across today and looking at some gold stocks. USAS, American Gold and Silver, nice support right here. So there it is, common theme. Buy these stocks at support if you are bullish in gold. Now, we don't have the reversal in gold. I cannot reiterate that too much. Gold's in a clear downtrend, a near and intermediate term downtrend. Gold peaked, around with the dollar bottoming. The dollar's in an uptrend. And should that longer term, or intermediate, I should say, bullish case for the dollar pan out, we could see a lot more downside in gold. So don't get married to these. But like I said, I'm pointing them out because they're objective trades, and I know a lot of people like to trade the gold and silver mining stocks. And even if you recognize this for what it is, here's a stock that's in this trading range. We have really two ranges. We have these extremes right here. We got to a couple times, but most of the reactions are at this line right here, that 311, and a gap right there. So you can just trade it as long as you're in the range. Wash, rinse, repeat. Buy it at 245 or close to that level. Swing it on up to about 330 and change. It's about a 30% run from top to bottom of the range. You could turn around and short it again if you want, and if the charts confirm. Trade it as you want. Like I said, it's at support, so you can make an objective case to go long with a stop below. Let me see if there's anything else I wanted to cover. Check. No, not in the gold stocks. I have quite a bit, some other things I'm looking at, other sectors. I want to cover the VIX with you guys, the VXN as well, the NASDAQ VIX, semis, packaging and container sector. I'm seeing a lot of setups there, and the ag inputs and commodities I'd like to cover as well, but those will have to be in a separate video or videos. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.